Okay, girlies, before you ever invest a single dollar, you need to know what your options actually are. Let me break down the main investment types in the easiest, girliest, least confusing way ever. What this video will cover. Today, we're covering stocks, funds, bonds, real estate investment trusts, and even a few unexpected investment types. Section 1, stocks. All right, let's start with stocks. A stock is literally just a tiny piece of a company. That's it. If the company does well, your piece becomes more valuable. This is the most common beginner investment you'll hear about. Imagine buying a tiny slice of the Apple or Netflix pie. You own a little piece of them now. Here's what you need to know. Stocks are higher risk, but they also have higher reward potential. They're great for long-term growth, like we're talking years, not weeks. Section 2, funds intro. Okay, now funds. This is where it gets fun. Instead of picking just one stock and stressing about it, a fund lets you buy a whole basket of investments all at once. Less stress, more diversification, which is literally perfect for beginners. Think of it like this. Instead of buying one outfit, you're buying a whole curated capsule wardrobe. Smart, right? Section 2, A, managed funds. So within funds, there are managed funds. These are funds where a real human or a team actively chooses what to buy and sell for you. Let me give you some examples. Mutual funds. These are professionally managed baskets of investments. Actively managed ETFs. Similar, but they're traded like stocks. Hedge funds. Super high risk, exclusive, definitely not for beginners. Pension funds. Your retirement savings being managed for you. Some REITs and private equity funds also fall into this category. Think of it like hiring a stylist who picks your outfits. They choose everything for you, which is convenient, but you pay extra fees for that service. Section 2, B, index funds. Now, here's where beginners really shine, index funds. Instead of humans actively picking investments, an index fund simply copies a whole market, like the S&P 500, which tracks 500 of the biggest US companies. It's like following a full recipe instead of guessing the ingredients. You're not trying to outsmart anyone, you're just following the market. Why do girlies love index funds? They're low cost, they're diversified, they're great for long-term investing, and they're super beginner friendly. This is literally where I tell most people to start. Section 2, C, ETFs. Okay, ETFs, exchange traded funds. These are also baskets of investments, but you can buy and sell them throughout the day, just like a stock. Some ETFs follow an index, some are actively managed. It really depends. Think of it like a cute shopping bag filled with different items. And the bag itself is what you're actually buying. You get the whole mix in one purchase. Section 2, D, R, E, I, T, S. Now, let's talk REITs, real estate investment trusts. These let you invest in real estate without actually buying a house or becoming a landlord. You buy a share of a company that owns income-producing properties like apartment buildings, offices, or shopping centres. Then you earn money from the rent those properties generate. You're basically earning tiny pieces of rent checks without having to deal with tenants calling you at 2 a.m. about a broken sink. I love that for us. Some REITs are actively managed, some aren't. But the point is, you're getting real estate exposure without the huge investment or the stress. Section 3, bonds, camera, calm, steady energy. All right, bonds. When you buy a bond, you're basically loaning money to a company or a government, and they pay you back over time with interest. Bonds are lower risk and lower reward. They're not going to make you rich overnight, but they're great for stability and steady growth. It's like letting someone borrow your favorite sweater, and they return it, plus a cute scarf as a thank you. You get your money back, plus a little extra. If you're looking for safer, more predictable returns, bonds are your girl. Section 4, more investments. Okay, now for the fun part. People also invest in non-traditional assets. I'm talking about things that aren't stocks or bonds. Luxury handbags, yes, like Birkins, gold or silver, art, crypto if you're feeling spicy, wine collections, jewellery, even a rare sneakers or collectibles. Now, I'm not saying run out and buy a Birkin as your first investment. These are not beginner friendly, but I want you to know this world exists. Think of this as the spicy section, not where you start, but fun to know about once you've got the basics down. Section 5, quick girly summary. Okay, let's do a quick recap so this all sticks. Stocks, tiny pieces of companies, higher risk, higher reward, funds, baskets of investments, way less stress. Index funds and ETFs, beginner friendly, low cost, diversified. Bonds, safer, steady growth, great for stability. REITs, real estate without buying property or dealing with tenants. And then there's the wild stuff, handbags, gold, art, crypto. You don't need to understand everything today. You just need to know what's out there. If you want me to break down each type in detail, starting with stocks, just hit subscribe and drop a comment telling me what confuses you the most. We're learning this step by step together, girlie. I've got you. And if you want all of this on a simplified PDF guide with all the investing basics I talk about, just click the link in the description. See you in the next one.